Good evening, everyone. We are live, so Stella, you can take over.
Okay. Good evening, everyone, and welcome to this special edition of the NSCHE National Students Body Webinar Series. My name is Talamari Skidochukwu, founder We All Can Grow Initiative, and I will be your moderator for today's session. We are delighted to have students, young professionals, and stakeholders joining us from across and within Nigeria. Today's webinar series is themed The New Nigerian Tax Law Things You Need to Know. This conversation is especially important as tax reform increasingly affects students, startups, SMEs, and professionals. I want to, at this juncture, thank the host of this event, the person of Sir Francis Joshua Omolame. Thank you very much, sir, for having us, getting this program for us. Ladies and gentlemen, we will now proceed to the main highlight of today's session, the keynote presentation. Our guest speaker today is a seasoned professional whose work cuts across law, taxation, leadership, and society impact. Sir Michael Oyaga is a legal practitioner, public speaker, an agripreneur, and an accredited mediator with the Center for Effective Dispute Resolution, United Kingdom. He is the author of several impactful books, including The New Tax Act and SMEs, What Every Business Owner Stands to Gain, and was recently appointed by the federal government as a tax ambassador. We are honored to have him share his wealth of knowledge with us today. Sir, you are warmly welcome. And to everyone joining, do well to drop your name, your department, your school, where you are joining from, and what you are expecting from this webinar. Also, do well to screenshot the live session and fill up the pinned link on the comment section. I want to thank our speaker once again, Sir Michael Oyaga. You're warmly welcome, sir. And at this juncture, it is over to you.
All right, thank you so much, Stella. Thank you, Joshua, for having me, and everyone that is joining us for this webinar today. It's a pleasure and a huge delight for me to be here. Whenever I have the opportunity of sharing information and sharing knowledge, I appreciate it so very much. I hope you can hear me very well before we fire on. Can you hear me very well?
Yes, we can, sir.
All right, so I'll be sharing my screen with us so that we'll be on the same page. For those who are joining, it will be easy for you to follow what I'm saying, and then you can ask your questions when it is time for questions. Okay, we'll try as possible to be very brief, but at the same time to be very clear. Now, of course, as you all may know, today is the second or the third day of January 2026. That simply means that the new tax act that we are looking at is already in place. We're expecting it as a day for yesterday, but it's already here with us. However, the knowledge you are trying to share today is not late yet. It is still something that will be very useful to every one of us. Why do I say that? Because the remittances, the deductions and the remittances that are expected, we'll be doing all of that at the end of the year, depending on the financial year of your business, or as an individual, also the year the time you're supposed to do your remittances for your personal income tax. Okay, so but then the year has just begun, so it is very important for you to have this information, this knowledge, so you can keep your records, and then when it is time for you to do your reconciliation or do your remittances to the taxman, it's very easy for you to do that. So usually I like to take the frequently asked questions. The reason is that there are a lot of misconception out there, and a lot of people have said too many things that are not correct, and then causing fear and causing confusion. But our duty today on this webinar is to clarify some of those misconceptions and also answer the questions that you may have, so that we can all be properly guided. All right. So let's take the FAQs and then we'll go on from there. Now, this is always the first question. Which specific individual does the Nigerian tax law apply to? Now, I'm very conscious of the fact that I'm talking to a student community. So you may want to ask, okay, so if my parents give me my school fees, will it be taxed? And the rest of that. Now, for you as a student, your school fees is not taxable. Your pocket money or allowance or stipend is not taxable generally. But then if you are engaged in any business as a student, then we now need to begin to look at what is the rate of turnover for you per annum, beginning from this month down till December. And then what are the kind of businesses that you are into, because the kind of business you are into would also determine whether you are going to be taxed or not. Okay, so but generally, the law focuses on two categories of people: either you're a resident person or a non-resident person. Resident person are those people, individual businesses, companies that are operating within our shores, within Nigeria, earning income from Nigeria. Non-resident persons, individual or business or company, are those businesses or individuals that are not resident in Nigeria, but they are making money from Nigeria. So but for this audience that I'm talking to tonight, I know that you are based in Nigeria, so you are more of residents, and so you fall under that category. All right. I know that some of us may be involved or doing some kind of remote jobs. Maybe you are doing some side also for some international or multinational companies out there. So long as you are within Nigeria, whatever it is that you are earning from that side also is taxable. So again, as a student, generally your stipend, your monthly stipend, your school fees, they are not taxable. However, if you are into any side also, just to keep body and soul moving, I know I did that when I was in school. Yes, I did that. I did some business when I was in school to augment for my monthly stipend from home. All right. So if you are into that, then we now need to begin to look at, okay, what exactly are you doing as a business, and then is it taxable? I give an example. When I was in school, I was basically selling school books, textbooks, for my faculty, and that category of items, educational materials, come under educational materials. So educational materials under the new tax act, they are not vatable. VAT is the aspect or the kind of tax you pay on consumption and services. Okay, so we call it consumption tax. So either you are selling goods or you are rendering a service. Either you are selling goods or you are rendering a service. So while I was in school, I was selling textbooks, which of course fall under what we call educational materials. So assuming I'm still in school today and I'm selling books, of course that means that my income will not be subject to VAT. However, if what I'm making is huge, let's say as a student now, which of course I know is not possible, but if what I was making from the book is huge and is above 100 million, above 100 million, the new law sees my business not as a small business. Now, because my turnover annually is more than 100 million, then that business is liable to pay company income tax. Either company income tax if I'm running the business as a limited entity, or personal income tax if I'm running the business as a business name, what you call sole proprietorship. Or let's even say that it's not registered as a sole proprietorship, it's not incorporated as a limited company. I'm just running it in my personal name, Michael Oyaga, while I'm still on campus. And now, because of the volume of turnover, that business is going to pay the personal income tax based on what we call the progressive tax band. All right. In the course of time, we'll come to that just very quickly. So, will transfers and deposits into my account be taxed? Not at all. That's why I said that your school fees that is paid into your account will not be taxed. Your monthly stipend will not be taxed. You see, we need to understand that it is not every money, every kind of money, let me use that word, that comes into our account that is subject to taxation. However, I think a week or so ago, yeah, that should be a week ago, the CBN came out with a policy, and I'm sure the banks would have sent you some emails making you to know that the stamp duty that was deducted from every deposit, that is, you as a receiver was the one that was paying the stamp duty before now. If you check your emails, I'm sure you have something like that. But now, subsequently, from the 1st of January, it is now the person that is sending the money that will be paying paying that stamp duty. I think it's 15 naira thereabout. So that is also a form of tax, yes. But that doesn't mean that every other money that comes into your account will be subject to tax. No, no. So the fact that stamp duty is charged on the money coming into your account, no longer you, the receiver, paying, but the sender is the one paying now. But that doesn't mean that every money that is coming to your account will be subject to every manner or every kind of tax. No, it's just the stamp duty, of course, depending on the amount. Because I think 10,000 naira, from 10,000 naira below downwards, is also exempted from that stamp duty. So it's actually not bad news all the way. Now, number three, will tax authorities now monitor my bank accounts of businesses? Of course, they will. They've been doing that before now, and they will continue to do that. Why is this necessary for the tax authority? Number one, to know what volume of transaction that is coming into your account. Number two, to also check the level of compliance. To check the level of compliance. I know that as students, even though we say, oh, but we are students now, we are not making money. Some of us are into NFTs, some of us are into cryptos. All right, you mine, you sell, and the rest of that. So those are activities that are bringing money into your account, and the government has a system of checking the volume of money or the volume of transaction that goes in and out of our account. If you don't know, please know it now. With your BVN, with your NIN, to monitor our account is not any big deal actually for the government. But the essence of monitoring the account is not because they want to freeze your account. A lot of people have gone to the market to go and say that. When I say market, I mean to the public, to say that, oh, they're going to freeze your account, they're going to freeze your account. That is not correct. That's not true. So it's not for the purpose of freezing your account, but to check the volume of transaction in that account and to check the level of compliance. Now, if before now, the banks have actually been reporting the volume of transaction in our accounts to the EFCC and to some other government authorities. Now, if you have taken time to check, when you go into the banking hall, majority of the banks have that notice pasted on their wall. You will see any transaction that is above 5 million for individual and 10 million for a corporate entity will be reported to either the EFCC or something like that. I'm just trying to paraphrase it, but I'm sure you must have seen that kind of a notice there. So that simply tells us that even before now, they've been monitoring your account and then making reports to the government before now. The only difference now is that the threshold has increased. So it's no longer 5 million and 10 million, as the case may be. It's now going to be from 25 million upward, and it is 25 million every quarter. Every quarter. So every 3 months, you'll make a report to the government that, oh, this account has more than 25 million in the coffers. So if it's an individual's account, okay, no problem. So let's watch first quarter, more than 25 million. Second quarter, more than 25 million. Third quarter, more than 25 million. The fourth quarter, more than 25 million. And then by the end of the third quarter, that is December 2026, for example, you didn't make any remittances, you didn't pay any tax. By the first week of January, you get a letter that we saw that you had more than this amount in your account and you didn't pay any tax, either the personal income tax or the company income tax. So what's up? Come and declare. And then you may begin to have issues from there. All right. So basically, the tax authority will be monitoring accounts, not because they want to freeze your accounts, but because they want to check your level of compliance and also to know the volume of transaction going in and out of those accounts. All right. So number three, if I run a one-man business, do I pay personal income tax or company income tax? As a student, you have your side also. Maybe you are selling shoes, you are selling clothing in school, you are selling wigs, you're selling books, or you are selling food stuff. You have your small catering business that you are doing. just to make ends meet as a student. Let me see some other businesses that we do now. You have a photocopying business center where you do photocopy, you do typing, and the rest of that. Those are businesses that I know that students are engaged in. All right. So that may come under a sole proprietorship or a limited company. But I'm sure a lot of us will not do limited company. So let's deal with sole proprietorship, a one-man business. Now, if you are running your business as a one-man business, that is, if you have even become so diligent to the point of registering that business with the Corporate Affairs Commission. Now, what you pay is what we call the personal income tax. I listened to an influencer, a social media influencer, who said that whether you are a personal, whether you are a business name, sole proprietorship, or you are a limited company, that both structure of businesses are subject to company income tax. And I said, no, that is not correct. That's very wrong. I have to send him a message that please can you correct that impression because that is wrong. All right. So it is the sole proprietorship, the one-man business that is subject to personal income tax. Now, the sole proprietorship is one of the structure under the Company and Allied Matters Act, the CAC document that you can run your business on with. We have the sole proprietorship, we have the limited liability, we have the limited by guarantee, we have the incorporated trustees, then we have the what's it called? Limited partnership LP. Okay. Now, if you have not registered your business or you have registered your business, it is the same thing for the sake of sole proprietorship. Is the same thing. What do I mean by that? If you are running a sole proprietorship, the law sees you as the business and the law sees the business as you. That is why it is called sole proprietorship. Unlike the limited company, for the limited company, the law sees you as different. So you are an entity, your business or your company is an entity. And that is why for a limited liability company, it is called a juristic person, not a natural person, but a juristic person, because you are two different individuals. But for a sole proprietorship, you are the business is you. So the two of you are the same thing. All right. That simply means that for the purpose of taxation, you are subject to personal income tax. And for the personal income tax, we have what is called the progressive tax band from 800,000, which is the first level, to 2.2, which is the second level, to about 9 million, which is the third level, then 13 million, which is the fourth level, and on until you are above 50 million. Now, for the first level, which is the 800,000, let's say your annual turnover. You see that I'm using the word turnover. I'm not using the word income now. Now am I using the word profit, because the tax you pay is actually subject to your profit, not to your income, but to your profit. So I'm not using the word profit, neither am I using the word income, but I'm using turnover. So let's say your turnover is 800,000 annually, not monthly. 800,000 annually. Now that turnover of 800,000 is not tax deductible. Is not tax deductible. So from 800,000, 700,000, 600, 500 downwards, you are exempted from paying personal income tax. You are exempted because that money is exempted. Now, but let's say that you are earning more than that. You're earning like 5 million annually, not monthly. Then you'll be subject to the first or the second level of the progressive tax band, which is 2.2 million. Now, at 2.2 million, I think you'll be paying about 15% as your personal income tax. Now, because of the audience I'm talking to this moment, I want to assume that, pardon me, I want to assume that none of us is earning as students in side also. None of us is earning up to 5 million per annum. All right. So whatever it is you are earning as a small business, you are free. Your money is not tax deductible. Your income is not tax deductible. You are free to enjoy your money. Now, let's even assume that your business is registered, okay, as a limited company. Now, the law says that if your annual turnover is less than 100 million, that is from 100 million downwards, the law sees your business as a small business. As a small business. Now, because the law sees your business as a small business, you are not even expected to register for VAT. Please note that VAT is consumption tax. You are not even expected to register for VAT. Neither are you required to deduct VAT from any goods or any service that you sell or that you render to anybody. Neither are you expected to remit any VAT to the government because the law sees you as a small business. So, for me as a person, the new tax act favors small earners and favors small business, low income earners, pardon me, low income earners and small businesses. So, if you are a low income earner or you are a small business, then you enjoy the provisions of the new tax act. Seriously, and for me, I think that's good news already for those who are in small businesses and for those who are low income earners. All right. However, you may decide not to remain a small business. You shouldn't be thinking small, you should think big so that you can get more money, earn more money, and of course, fulfill your obligations to the government when the need arises. All right. So, who is exempted from personal income tax? I think I touched that a little while I was explaining. Individuals earning the national minimum wage or less. So, let's say your total income for the year is less than 800,000 naira, you are automatically exempted from personal income tax. Or let's say that as a business, your total turnover for a year is less than 800,000 naira for a whole year, not for a month. Now, please note, for a whole year, you are automatically exempted from the personal income tax. I know some of us, maybe because of our level of exposure, our family background, and the rest of that, possibly you are doing shares and you are making profit. And so, if I sell shares and make profit, will I pay tax? Except the shares you have sold is above 150 million, and the profit you made from your tax is above 10 million. Except that, sorry, please, my dog is disturbing me. Now, except your shares is more than 150 million, or the profit you have made from your shares is also more than 10 million, you are not expected to pay capital gain. Except the shares you have sold is more than 150 million, or the profit you have made is more than 10 million, you are not expected to pay capital gain tax. That means that if the volume of shares you sold is from 150 million downwards, or the profit on your shares is not up to 10 million, then you are exempted, all right, from capital gain tax. Another exemption is, let's even assume that the volume of shares you sold is more than 150 million, but then you reinvested the money into buying other shares, other equities, and the rest of that, then you are not going to be paying any capital gain tax on it. So that in a way is encouraging investment in the capital market, and that will help the capital market, of course, to grow because more money is in the system, and that would help us a lot. All right, so pensioner, that doesn't concern us because we are students. Military, that does not apply to us because we are students. Okay, so let's talk about creatives. Let's talk about creatives because I know some of us may have, apart from being in the engineering space, you may be an author like myself. You may be a sportsman, engaged in sporting activities, or you may be have the desire to wax an album and then to work with a record label and the rest of that. So the question is, as a creative, do you still enjoy tax exemption on your foreign income? Now, whether it is foreign income or it is local income, that is income you earn within Nigeria, none of them is exempted. Now, none of them is exempted. But please note that whatever it is that you are earning is still subject to the progressive tax band I've talked about before, and then is subject to the threshold 100 million downwards. So let's say I'm an author, and then my annual income, annual turnover rather, from the sales of my books is not up to 100 million. I'm exempted. Let's say I'm a musician, an artist, and then I've signed it onto a record label, and then the first money they gave to me was about 150 million, because I'm very good at singing, my lyrics are top notch and the rest of that. And I got 150 million. I'm functioning, or I'm acting as an individual, not a business, not a company. I am going to pay tax subject to the progressive tax band. Okay, subject to the progressive tax band. So we need to have this understanding, so that when you are engaged in any creative activity, you know what guides you, what aspects of the tax requirements guides you in your income. Now, let me do a quick distinction between income and turnover or revenue. Now, I said that the law is the intention of the law is to tax income or to tax profits, not your revenue, not your turnover. What is revenue or what is turnover? Revenue or turnover, they are the same thing actually. Revenue or turnover is the aggregate, is the total money that enters into your account. Total money that enters into your account. But the total money that enters into your account, if you are a business, is not your income, neither is it your profit. Your income or your profit is what you make at the end of deducting your expenses. So let's say the total money that enters into my account this year is 100 million. Okay, and then but the 100 million is not my income. Neither is my profit. It's just revenue. It's just revenue, or it's just turnover. Now, by the time you begin to deduct all your expenses, you pay salaries to staff, and then you deduct housing, what's it called? House insurance, you deduct health insurance because you have HMOs for them, you deduct pension fund and the rest of that. You will discover that at the end of the day, the money that came in, the 100 million that came in, will definitely reduce when you run all of these expenses. Okay, for those who are selling goods or selling rendering services, let's say you bought a pair of shoe, for example, on the market for like 50,000, and then you sell it for 70,000. There is a possibility of you thinking that your profit is the 20,000 on that sales. No, your profit is not 20,000. Please note this: your profit is not 20,000, because even though you sold it for 70,000, you bought it for 50 and sold for 70. You need to deduct your cost of transportation. You need to deduct your cost of storage and other logistics, warehousing. You need to deduct the cost of, maybe you have a salesperson, salary, and a lot of other costs that came into that business on that particular item. Okay, so it is important for you to make all of these deductions before you now arrive at your actual income or your actual profit. Your actual income or your actual profit. So that 20,000 naira is not your income, is not your profit. It is just a revenue, but it is not your profit. So crypto NFTs, yes, are they taxable? Yes, they are going to be taxable from this year. From this year. Now, last year, 2025, the federal government came up with what's it called now? Not a new law actually, but I think I would say that the Investment and Securities Act (ISA) was amended to make provisions for virtual assets. Virtual assets are NFTs, cryptos, and every other digital assets. Okay. Now, before now, we know people trade all of these things. It was more like operating in the dark market. Nobody knows where it is, and nobody knows where the wallets are. You are just trading and all of that. So, but the government says, you know what? Can we make this thing more structured? Can we have those who are practicing or trading, or who are what do we call it? VASP, virtual asset service providers, can we have them come register with the government, so that we can at least put a face to the people that are doing these things. Okay. Before now, it was heavily regulated. You can't trade crypto and the rest of that. But now you can trade crypto so long as your VASP, your virtual asset service provider, is registered with the government, with the Securities and Exchange Commission. Now, the beauty of that is if you are trading through a registered VASP, your money is safe, your wallet is safe, and every other thing that has to do with your platform is safe. Unlike you trading through a VASP that is not registered, anything can happen. They can go into the thin air tomorrow. In fact, somebody said that a lot of these VASP that we are using, even in our own climate, many of them, we think that they are in the Western world, but they are not in the Western world. They are actually here in Africa, and then they will just pump and pump and pump, and then you fall victim. All right. So for the sake of safety, safety of your wallet, safety of your trade, and the rest of that, it is advisable to trade with a registered VASP. Now, you are trading with a registered VASP, your wallet is there, and everything about you is there. As you sell or buy, whatever is the profit that comes in on that transaction, that profit is taxable. That profit is taxable, subject to either the personal income tax as an individual or as a sole proprietorship, or subject to the CIT and then the capital gain tax as an incorporated company. All right. So now this is the progressive tax band I was talking about. The first 800,000 naira, you pay 0% tax on it. The next band is 2.2, you pay 15%. The next band is 9 million, you pay 18%. The next band is 13 million, you pay 21%. The next band is 25 million, you pay 23%. And then above 50 million, you pay 25%. Now, let's say that I'm earning 15 million. Let me take a little time to explain it before we wrap up. Let's say I'm earning 15 million. 15 million minus 800,000, because the first 800,000 is exempted. So I have 14.2 million. 14.2 million. So the next band is 2.2 inside the 14.2. Okay. So I pay 15%. So deduct 2 million, 2.2 from 14.2. You have about 12 million. So the next band is 9 million. 9 million from my 12 million is subject to 18% taxation. Now, after that, deduct the 9 million from my 12 million. What you have will be 3 million. So 3 million is not up to 13 million. So that simply means that from my 15 million, I'll be paying 15 plus 18%. That is 32% personal income tax. 32% personal income tax on my 15 million. If this is not clear, let's deal with it during the question and answer session. Big severance package does not apply to us because of the audience I'm talking with tonight. And then dividend from rent abroad also does not apply to us. Now, my uncle wants to go into agriculture next year. Anything that has to do with agriculture from the year of commencement is free. It's not subject to capital income tax. Okay. And then it's also not subject to VAT. It's also not subject to VAT. Is VAT exempted. So you are into crop production, you are into livestock rearing, you are into forestry, you have a rubber or cocoa plantation, dairy product, cocoa processing, you enjoy 5-year tax holiday from the day you begin your operation. This is meant to encourage farming, because we actually need to encourage farmers to farm so that we have food to eat, especially for those of us who are foodies. Thank you. All right. So income from federal or state bonds, for the sake of those who are into investment in federal government bonds, is not tax deductible. So you enjoy free tax on that. For rent, that is for those who are working, or for those who are not for those who are working, yes, who are paying rent actually. But even if you're not paying rent, it's good to have this knowledge. The law makes provision for tax relief. So I want to pay my tax, but then I am to enjoy some rent relief from the tax. So what is the provision? 20% or 500,000 of your rent, whichever one is lower. 20% or 500,000 of your rent, whichever one is lower. So if your rent is 1 million, for example, you enjoy 20%. That is 200,000, because 200,000 is lower than 500,000. If your rent is 5 million, for example, you enjoy 500,000, because 500,000 is lower than 20% of 5 million. 20% of 5 million is 1 million. All right. So that is just to encourage people to pay tax, and also to make you know that it is not a matter of take from you. The government is not just there to take from you. They are also there to also give you back as an individual or as a business. There's also a provision for the refund of tax, refund of VAT, refund of VAT. Now we have what is called the input VAT and the output VAT. The output VAT is the one that maybe you've come to buy an item from me now, and then I add VAT to it. So you pay the government through me. I deduct and remit to the government. That is the output VAT. But the input VAT is the one that I incurred in the cost of processing. In the cost of processing, not the ones I deducted from your money, but the ones you deducted from my own money when I came to buy goods from you, or when I came to get a service from you. All right. Now, at the end of the day, when I am to pay my VAT to the government, there will be a net of how much have I charged other people, how much did I pay other people. There's a net off. So whatever is the balance is what I will now pay to the government. That may sound a bit technical, but maybe you can ask questions on that and I will answer it later. Okay, so if my company's turnover is below 50 million, will I pay tax? No. Small companies are exempted. Small companies are exempted from capital income tax, and they are also exempted from VAT. You don't need to register, you don't need to deduct, you don't need to make any remittances whatsoever. Okay, so remote worker, side hustle. You are there in school, you are working for a company, you are into digital, what they call it now, graphic designs. You do a lot of that for them, you do voiceover for them, and the rest of that. Yes, because you are in Nigeria, though your company is abroad, you pay tax. But note again, it depends on the volume of transaction or the volume of the turnover that will determine the tax band that you fall in, or the threshold of the tax that you are going to pay. So I'm going to stop here for now, and let's take some questions for the next few minutes before I jump out. Thank you so much.
All right. Thank you very much, sir, for this very insightful section. Thank you for the impactful presentation. We'll now move into the question and answer segment. Please do well to drop your questions in the comment section if you haven't. I'll be taking a few of them as time allows. So the first question I can see, how does the government understand our income, our turnover and profit so that they can rightly tax? So, and then secondly, I saw some information about adding description on every transaction and that without it, any money received will be taxed. Does this apply?
All right. On the issue
Some-
of the profits, yes, can you hear me now?
Yes, sir. Yes, sir.
All right. Now, on the issue of the profit, this is the way it works. When it comes to tax, you are expected, or let me say, I am expected as an individual to assess myself. Our tax system is based on self-assessment. So I'm the one that will assess myself and say, okay, this is what I'm earning, and this is what I am supposed to pay, looking at the tax band or the threshold, either as an individual or as a company. This is what I'm supposed to pay. Self-assessment. Now, the government is not going to assess you if your self-assessment is fine and if the money you are paid as tax is appropriate. But when the money you are paid as tax is not appropriate, or they feel that your self-assessment is not correct, then they will assess you. We call it the best of judgment, BOJ, best of judgment assessment. Now, the BOJ is usually employed where, number one, you didn't assess yourself properly, or number two, you do not even assess yourself at all. So it is advisable that you do your self-assessment by yourself, because if you do your self-assessment by yourself, worst case scenario is, okay, oh, you didn't assess yourself properly, so can you come and let's have a discussion, and then they assess you, and then you can make up for the difference, either higher or lower. But when you say no, I'm not going to assess myself, I'm not going to pay tax, then they will come and assess you by themselves. And when they do that, it is not always very good, neither is it always very favorable. So when it comes to profit or income, it is your responsibility as the taxpayer rather, to assess yourself. All right. So I missed the second question.
Okay, the second question said, I saw some information about adding description on every transaction that without it, any money received into an
Beautiful,
account will be taxed. Does this apply?
beautiful, 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 beautiful. On the issue of narration, what is the essence of narration? Is just to, okay, if you are a Christian, for example, we say you have your name, and then you go for baptism, and you are given a baptismal name. All right, you are given a baptismal name. Now, the essence of narration is like giving the money in your account a baptismal name, and that is for the purpose of defining the nature of the money. What do I mean by that? The taxman will assume, particularly where you fail to assess yourself. Now, the taxman will assume that every money in your account is an income. Every money in your account is an income. And then you have failed to assess yourself. You have failed to tell us this money is not income. Oh, this money is my uncle's money. This money is my niece's money, or whatever it is. Now, because you have failed, because they have access to your account also, remember we mentioned that. So they will take the account statement and assume, is an assumption, which of course is a rebuttable assumption, and assume that okay, all the money that came in January was income, and based on that, they would charge you, or they will assess you and say, "Come and pay so amount." Now, for the ease of self-assessment, and for the ease of what's it called? What's it called now? Best of judgment assessment in the event that you fail, it is proper to narrate. It is proper to narrate. Now, when you give narration to every transaction, it is even easier for your accountant or easier for your tax consultant to pick your account statement in your absence, and then to go through everything and say, look, this money is not income, is not income, is not income, is not income, is not income. And with that, you'll be able to knock off whatever assumption the taxman has made. So putting narration in your transaction is for your own good. It doesn't mean that every money in your account is going to be taxed, but every money in your account can be taxed where you don't have proper narration to explain. You know, we normally say in the local palace, you go explain tire, no evidence. So the narration is more like an evidence to show the taxman that look, no, you are getting it wrong. This money is not income. This money was the one my uncle sent to me to buy this or to do that. And with that, you escape. All right.
All right, thank you very much, sir. We have another question. It says, will money won from gambling be taxed?
Yes, it's an income. It's an income depending on the amount. If it is above 800,000, yes. If it is less than 800,000 for an individual, no. If it's above 100 million for a company, yes. If it's less than 100 million for a company, no. It's an income.
All right, sir. Thank you very much. We do not have any more questions on the comment section. I believe that everybody's question has been answered and our doubts has been cleared. So if you still have questions, please do well to put it up on the comment section. And then with this, I will be calling on the host of the event, Sir Francis Joshua Omolami, to present the certificate of appreciation. Sir Francis.
Thank you.
All right. Thank you, Estela Maris. Sam Michael, I want to appreciate you for this wonderful section for the student community. I want to say a very big thank you. And everyone watching and hearing me, I want us to say thank you to Sir Michael in the comment section. He has really given us the knowledge, and we really, really, really appreciate him for that. So, on behalf of the students, National Student Leader of his name, Ibrahim Pederu Hanan, I'll gladly want to present this certificate of appreciation to Sir Michael Oyaga in recognition of your outstanding contribution and invaluable role as the guest speaker at the students' webinar on taxation awareness. Sir, thank you very much. I just hope you appreciate this token from us. Also, when next we call you for a section like this, we hope you give us your valuable time and also deliver for us. So thank you once again, Sir Michael. I really appreciate this. And
Thank you
also
so
to
very
our moderator, thank you, sir. Thank you, sir. To our moderator, I want to say thank you also uh, for your coordination and also recognition for your outstanding contribution in invaluable role as the moderator of the student webinar on taxation awareness. Thank you, Stella Maris, on behalf of the National Student Leader and also the National General Secretary. We want to say thank you for this. Okay, okay, okay. Stella, are you there?
Yes, yes, I am.
All right. Thank you very much for your coordination. So I'll just hand it over to you.
All right. I'm happy, and I hope we all are also happy. And as we wrap up today's session, I'd like to join the voice of the host, the person of Sir Francis Joshua Omolame, to sincerely appreciate our guest speaker, Sir Michael Oyaga, for sharing such practical and enlightening insights with us. Special thanks also goes to the host of this event, Sir Joshua Omolame, the NSCHE National Deputy Student Leader, South South Zone. And to everyone who joined live, I can see FUPRI, Federal University of Petroleum Resources, even some universities I'm not aware of, University of Uyo, University of Benin, Lagos State University of Science and Technology, all of us, all those from Delsu, everybody, thank you so much for joining. Also, if you did not join early, this video is recorded. You can always come back to it and watch it. Also, invite your friends to watch it. Kindly follow our platform for future programs and opportunities. And do not forget to drop your comments, to like, to share, and to subscribe. Again, my name is Telamaris Kidochuku, and it has been a pleasure moderating today's session. Thank you all and have a wonderful evening.
All right. Thank you very much. All right. Thank you very much, sir. We appreciate once again.
thank you so much.
All right.
Mhm.